Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And sometimes that ability might be a little bit lacking. Hopefully that's not true today. Anyway, it is the final day of May, 31st of May 2025. Time is currently 9:04 a.m. So we have about 15 hours left before we move into winter and the best month of the year. And it's not a debate that you're going to win if you try to debate that with me. June is by far the best month of the year. And there's one reason behind that and one reason alone. Yes, I was born in June. So that's the reason why it's the best month of the year. Anyway, pretty dreary outside. It's not that unusual this time of year. So Brisbane's transitioning from the wetter part, which is around February, March, into the driest part of the year, which is around August, September. Can't remember if August or September is the driest month in Brisbane. So we are transitioning, and towards the end of winter, Brisbane is quite stunning. Sometimes we do have a severe lack of rainfall. I don't think that's going to happen this year. It could happen, who knows? It's hard to know exactly what's going to happen, but typically once we get into August, September, I don't have to mow the lawn for many, many, many months, because just a lack of rain. But I'll have to admit that Brisbane is really nice in the winter months. Okay, you don't want to talk about climate and weather. Let's get into some of your questions and or comments. And the first one is from Just James Dean. 5 weeks to end of financial year. And this year, I can't wait to the last minute to do my taxes because I'll be overseas when it's due. So I'm going to have to do my taxes before. I always wait till last minute to do my taxes for some reason. Anyway, Just James Dean is saying, poor performing stocks are going to get dumped. What's worth a look? Please give your suggestions. Interesting enough, I've started going through quite a few companies that I think are possible good value, that are looking cheap and are primed for a possible turnaround. And I think I want to really emphasize the word possible, because a lot of times the worst performing company one year becomes the best performing company the next year, because the market overreacts both ways. You overreact on positive news to the upside and then overreact on negative news to the downside. Now, a simple way of doing this is just go through charts. For instance, what's a good example here? A really good example would be Horizon Holdings. So the share price of this company just keeps on dropping. If Trading View wants to work, hello Trading View. Sometimes you just have to refresh it. And there we go. That's the XJO. So Horizon Holdings is a transport company, like a train transport company, historically for coal, but it's diversifying. Share price has been a long-term downtrend. In fact, share price is at a long-term low. In fact, I have a feeling it might be heading towards the lows, or when the company listed on the ASX 2013, I'm guessing here, the share price is moving back to those lows when it listed. So let's just look at the weekly chart. And they listed in 2010, a little bit off there. And they were around about 260 when they listed, went all the way up to a high of $6, and now they're at 295. So is the market overreacting to Horizon? A nice dividend yield. And what you might get out of a company like this is you get a nice dividend yield, plus you get some capital returns if the share price rebounds. So this is sort of thing I'm looking for. Now, it doesn't mean, just because I brought up Horizon, doesn't mean I'll necessarily buy this company. It just popped up as the last company I put into my cheap ASX watch list. Only 5 companies there so far. So I'm just into going through this process. But another thing is having a look at 52-week lows. And you can do this in what we'll do is we'll go to market index. I already did it earlier, but I want to do it freshly. So if you go to market index, there's probably other sites that you can do this as well. But if you go to top gainers, top losers, 52-week highs, 52-week lows, which company is out of 52-week lows? For instance, I actually won't do this by, I'm not sure how they do this or list this. We'll list this by market cap. So Domino's Pizza is at a 52-week low. Is this getting interesting levels? So share price of this company is not only at a 52-week low, I'm pretty sure Domino's is at A decade low? Let's have a look. Just like Horizon, the last time share price of Domino's was this low was back in 2014. So we're at a 10-year low for Domino's. So again, is the market overreacting, or is there more downside to come for Domino's? Helios, Jumbo Interactive is another one I was having a look at the other day. Share price of this company has dropped. And what is interesting about Jumbo Interactive is the high volume we've seen in the last few weeks. Share price has been hitting or getting close to a nice little support zone. And if we go to the daily chart, you notice a fair bit of volume has been coming in the last few days, particularly on Friday. A massive amount of volume came in, not sure why. And it does look like 950 is holding quite firm for Jumbo. And I'll probably also say there might be some value. This one, P ratio is only 15.54, dividend yield 5.1%. So what else do we have here? IPD Group, they released negative results or negative update the other day. Share price has gone down a fair bit. I think there is a chance the market is overreacting to this one, but look at that chart. It's a pretty negative chart. So a lot of negative sentiment in this one. And again, there is possible an argument this company is looking really good value at these levels. A dividend yield of 4%, PE ratio of 12.45. So if you just keep on going down this list. Satire is another one I was looking at 39.5 cents. I was thinking, ooh, this is like almost at the levels we saw this company get to during the peak pessimism back in, remember when the interest rates were being cut, there was a lot of negative pessimism about this company, and the share price during that period in June 2022, share price got down to about 35 cents, I think was a low. This company also listed at around about 45 cents. And you can just see how much, how quick, maybe not quickly, but you can just see with the wild swings in the trading, in the share price volatility of this company. So the lows have been around about 40 cents, so between 35 and 40 cents, and the highs around 480, that if the sentiment suddenly shifts in this company and there's a lot of positive movement in the share price, you could get there is a chance you could get a pretty big bagger out of this one, possibly even a 10 bagger out of this one in a fairly short period of time. So I'm keeping a close eye on this one just to see if sentiment starts to shift. It looked like the other day that maybe sentiment was beginning to shift. There was a nice little day on the 13th of May, share price rallied 22.8%, but the share price, actually 22%, but the share price actually pulled back lower to what it was the previous day. So this just shows you how much power negative sentiment has. The share price of this company has dropped from when it was before that really good day. So even though there was one really good day, share price has dropped since then. What else do we have here? Avita Medical, share price just keeps on dropping with that one. I think there is definitely an argument that there might be some good value with that one. SciDev, company I got rid of quite a few months ago. So I might have to look at that one again. I reckon there could be some good value. So yeah, so if you go through 52-week lows, you could also go to 52-week highs and go through the markup. So Catapult, Vista Group, some of these, yeah, Tasme, up 6.41%. Healthco, Healthcare and Wellness REIT had a nice little, that's top gainers. I was going to say, some of these weren't screaming out 52-week highs. Brambles, Qantas, Technology One, Perseus, some gold companies in here. Bank of Queensland, interesting. Quite a few gold companies, in fact, including West African Resources. There you go. And EVT. I was trading Templar Webster, then I got out, and that was a mistake because share price is up a fair bit. And there's Catapult at a 52-week high. Okay, so hopefully I've answered some of your questions. I'll answer your question. What's worth a look? What is worth a look? I'm not sure. It's hard. But I do think some of those companies that are at a 10-year low, if they get some positive news, those companies could be looking interesting. And I don't think like a company like Horizon, I would think that there wouldn't be any risk of that company going any worse than they are going right now. But I could be wrong. Kapow 4 says, does this mean the P ratio of 0 is also considered to be expensive? So this must have been in reply to me saying supply network is high quality and expensive, I'd probably say that if you have a look at many high-quality companies, there is definitely an argument that they are probably expensive. And then he also said you can add Technology One and Telix to the list as well. So let's just have a look. Xero. Now, what you do is, if you just have a look at the P ratio for some of these companies, you're just going to immediately go, well, this is ridiculously expensive. In fact, for some reason, there is no P ratio for Xero in FinChat. I'm not sure if that is true. Let's just have a look at ComSec. They have a P ratio of 128. So if you have a look at the P ratio of 128, you're going to go, wow, that's really expensive. But the company could increase their profit fourfold over the next few years. It wouldn't surprise me if the company does that, because currently they're trading on a fairly low profit. So if we just have a look at their income. So a company went from being loss-making to profitable in the last few years. And I could easily imagine this company significantly increasing their profit over the next few years. Now, one of the ways I would determine whether a company might be, like a high-quality company might be good value or expensive, is just have a look at the P ratio of the company and compare it to historical levels for that same company over the last 5 to 10 years. You can't really do that with Xero right now because it's just become profitable over the last few years. So it's really hard to know whether Xero is expensive or cheap at these levels. I'd say more likely expensive, if anything else. And a lot of people would use like a DCF to value a company. I don't think you can do that with a company like Xero. I think it's a really hard task, because if you did it and change just the little things, just change the growth of this company, you're going to get wide range of values. So you could do a reverse DCF for Xero. In fact, what I've done in the past is I've actually used ChatGPT to do this. Do a reverse DCF for Xero. And the reason I like doing reverse DCFs is it tells you what growth in cash flow, or sometimes profit if you're using profit, a company needs to achieve to justify the current valuation. It's so much better than a DCF. So, and this is making some assumptions. Of course, you always have to make some assumptions. And so, according to ChatGPT, I don't know how true this is, given the inputs above, the implied perpetual growth rate required to justify Xero's current market cap is approximately 12%. This suggests the market expects Xero to grow its free cash flow at a compound annual rate of 12% indefinitely. So that is a little bit high, indefinitely. Anyway, so that's something you can do. And yeah, anyway, probably the other thing I would probably say is, would I consider Xero to be a high quality company? And I probably wouldn't just yet, because it needs a little bit more time to prove its business concept, because it's just become profitable. But the very fact it's become profitable, it's hit an inflection point, that's a good sign. So, and there's a lot of potential already priced in this company, market cap of $28.3 billion. So the other two companies are Technology One and Telix. Telix is the same thing with Xero. So even though I own all three of these companies, I probably wouldn't say Xero is high quality just yet, but it has potential. So Xero is definitely the sort of company I don't want to trade. I just want to own, because it has really high potential. Telix is the same thing. There is some risk when it comes to Telix, but just the growth in the revenue for Telix is probably the reason why I'm an investor. It was just the growth in revenue, and that is one of the things I always look at. So all you have to do is look at the revenue of this company and just see it explode over the last few years, from almost zero to upwards of $1 billion in the next financial year. That's the sort of thing I'm looking for. So it's almost impossibility to do any sort of DCF for this company. You just don't know. So if you have a look at profitability, they've just turned profitable, and in a few years, this company could increase a profit tenfold. You just don't know. So this is another case where I think it's just, there's so much growth. The growth could be substantial. And even if you're being a little bit conservative with the growth prospects for this company, you could argue that this company is undervalued right now. But you have to have a lot of faith. Maybe not faith is the right word, but you have to acknowledge that there is a bit of risk for these companies because they are quickly growing, and the slightest thing that could go wrong could temper that growth. And that's why some of these companies, when they do enter a period of a bit of headwinds, you can see the share price of these companies drop a fair bit. Now, Technology One is a little bit different because we do have a history of profitability from this company, which means we can actually compare the P ratio of Technology One right now to historical ranges. And that's why I would say Technology One is overvalued based off its history. But in saying that, we have seen this company move into the UK, and it seems like they have seen some success. I think it was UK. And it does look like there is potential that the company's revenue and profit is I wouldn't say increasing exponentially, but it's accelerating. And you can just see that looking at the growth rate in revenue over the last 3 years compared to the last 5 and 10 years, it is accelerating. And probably the same is true for earnings. Yes, it's true for earnings as well. Over the last 3 years, earnings has been growing at 19% per year. Over the last 10 years, only 15.6%. But the P ratio of this company is at 99, which is a little bit stretched. Now, that's just based off historical levels. So, yeah, I would say a P ratio of this company between about 40 and 60 would have been normal. Maybe 30 and 60 would be normal. But I think there is a little bit more premium being paid for Technology One just now because of that acceleration in growth and the expectations that acceleration in growth is going to continue over the next few years. And by the way, let's have a look at all 3 charts for these companies. We'll start off with Xero, and we'll have a look at the weekly chart for all these. And what I'm going to do is I'm going to put in the 200-week moving average. And just based off the weekly chart, these all have the characteristics of high quality companies. In fact, Xero's share price has gone from like $5 to $184 over the last 12, 13 years. And this is, the characteristic of a high-quality company. So even though I'm not calling it a high-quality company just yet, I think it has the potential, and I think the market is saying the same thing. Telix has the makings of a high-quality company, and you can just see the share price just exploding. This is also the makings, or the chart, or the characteristics of a high-quality company, just this little chart. It goes back to 2017. In fact, when this company listed, share price was around about 60 cents. Now it's $26.10. And Technology One, which I would argue would be by far the highest quality of these 3 companies because they have a history. They have a history, a proven history, and Technology One chart looks stunning. Now, in saying that, if you go back, so the company looks like it listed in 2000. So from when it listed 2000 all the way through 2012, share price didn't really do much, did it? So sometimes it can take a while for a company to prove itself. And then since then, the share price has only once fallen below the 200-week moving average. That was in June, middle of 2018. That was a great time to buy. And we have seen the share price just accelerate upwards. So this is a reason why, and can definitely see it happen over the last 2 months. Share price has gone from $23 up to $41 in a fairly short period of time. And I just get a little bit nervous when I see this sort of acceleration because that means the company's well above the 200-week moving average, and there's just more likelihood that we're going to see a period of time when the share price of this company absolutely does nothing, or we really need to see an acceleration in the growth in revenue and profit of this company because it does look like the valuation is becoming a little bit stretched. However, I am not quite willing to take profits in Technology One at this point in time, but I'm thinking about it. And when I say profits, I don't mean selling completely. I just mean maybe selling a third or maybe a half, just to lock in some profits. Okay, so I'm really all my questions and answers have been fairly verbose. Trade Hooper says, any comments on IFG Infocus? I remember looking at this company once, and I can't tell you exactly what they do. They caught my attention because they won a 3.25 million contract over 2 years, and the market cap was only 1.3 million before the market opened. Really size of the contract versus market cap of the company is what stood out to me. Don't know margins, how much of the contract will actually be profit, but still it looks significant. Yeah, I remember looking at this company once, but I can't remember anything else. So Infocus Group, share price, straight away the share price below 1 cent. So that's a pretty big turnoff for me. And it's near the lows, 0.4 cents. High is 5.6 cents. So that's for not a high quality company, for a bigger company, when it's at a 52-week low, that's okay. But if a company like this, not so, because it could just keep on dropping and then eventually just go bye-bye. Okay, so what I'm going to do is just have a quick look at the most recent. There is Infocus appointed to develop 3.25 million iGaming project. Total contract valued at estimated 3.25 million over the next 24 months. So I suppose that could be good. Now, particularly if they get more announcements like this, we're just going to see what this company does. Data intelligence and software solutions company with proven expertise in data analytics, as well as software and platform group. They have 4 business units: Infocus Analytics, the frugal grocery app, and software development consultancy houses Onify and Prodigy 9. So they have a lot going on here. What I'm going to do now is just have a quick look at the most recent results. I'm assuming they do a pennies 4Cs. Yep. ACCC Supermarkets Inquiry recognizes frugal grocery app. Okay, so let's have a look at the most recent pennies 4C. The very fact that I don't know, haven't looked at this company for a while, probably means their most recent pennies 4C wasn't that crash hot. And maybe I'm being a little bit unfair. So receipts 1.285 million. So that's okay receipts in 1 quarter. Operating cash flow negative $370,000. And capital expenditure about 200,000. So free cash flow negative by about 500,000. Probably the other thing I want to do, this was a pretty good quarter based off the 9 months to date. So the first 6 months they had about 1.3 million receipts. This 1 quarter, 1.285 million. I can't actually open my spreadsheet in this computer. I have it open in my other computer, but not this one. I should transfer it to this one. It's easy to do with what do you call it? AirPods, not AirPod, AirDrop. That's what it's called. I can easily transfer stuff from one computer to the next. But typically in this case, I just want to see how receipts are changing through time. I won't do it right now. Anyway, so the other thing I want to do is have a quick look at debt, cash on hand. So they don't have much cash at all, 194,000. So that means they will have to answer Section 8. They have a little bit of debt, not a lot, but a little bit. And they also, they said they got 3/4 of funding left. They included the unused financing facilities. Yeah, I understand that now. So they don't have to answer Section 8. Yes. I remember people or companies do that. They use or include their unused financing facilities as a means or an access to cash if they need it suddenly. So they don't have to answer Section 8. Okay, so my main concern with Infocus is share price, 0.6 cents. Now they have increased their cash receipts this particular quarter. I'd like to see them increase their receipts over a period of time. I'd like to see the company getting close to operating cash flow, free cash flow positive. I'd like to see also more contract wins, that sort of thing. So one in isolation doesn't mean much. I'd like to see more. And if we see more and more contract wins, that would be a good sign moving forward. That the services they are providing are liked, that are appreciated. Let's have a look at the chart. I don't think this chart is going to look any good. And we can go back to my moving averages. There we go. There was a lot of interest in this company on the 21st of November. Share price on that day rose 167%, went from went from 1.9 cents to 4.5 cents. And the share price, or the the hype in that company didn't last very long and share price just fell away. And that's a problem when share prices are in this long-term downtrends. Any sort of interest in the company gets quickly sold into by previous shareholders. And we also saw the share price pop up on the 27th of May, so that must have been that announcement. Share price popped up on that day on pretty big volume, 60%, and the share price went from 0.5 cents to 1.2 cents and has fallen back. And again, the reason we saw selling is because of all those underwater shareholders. So on a couple of occasions, we have seen a little bit of interest in this company, but interest has died away fairly quickly. Trade Hooper also says Painchek caught his attention, or her attention, with the announcement they are partnering with Eldermark Software in the US. The announcement sounded positive, but they couldn't quantify the financials for the deal. Possibly one to watch. Okay, we'll do the same thing with this one, but I'll get a move on because I'm warbling on, if that is a word. Painchek. I don't know much about this company. So, for instance, IFG has a market cap of 1 million, yeah, 1.57 million. So if the company can turn it around, company could be cheap. Painchek has a market cap of 99.46 million. So a little bit different market cap between these two companies. Painchek is a little bit better. So Painchek partners with Eldermark to expand US market reach. Okay. And yeah, I do prefer some sort of financial numbers because if I do see any sort of financial numbers, that is a little bit more powerful of announcement than these sort of announcements, because history has shown me that just because you get into a partnership with another company doesn't necessarily mean anything good is going to come out of it. So I need to see some sort of proof from Painchek. I've just realized in Czech there is no C. Well, there is C at the start, but there is no second C. Intelligent pain assessment. Sort of makes sense, Painchek. World's first regulatory cleared medical device for the assessment of pain, enabling best practice pain management for people living with pain in any environment, from those who cannot reliably. Oh, yes. There are a lot of people who can't report pain. Those who can, and for those whose ability to self-report their pain fluctuates. Aged care facilities, that sort of makes sense. Interesting what they're doing. Yeah, Alzheimer's disease, yeah. So what I'm going to do is just have a quick look at the most recent quarterly. And again, this is another one where I can't remember the quarterly. And usually if I can't remember, then more than likely they're not quite at that inflection point just yet, but they could be getting close. So receipts, 841,000. 2.5 million for the year to date. So roughly 800,000 odd receipts per quarter so far for the year. Operating cash flow negative by 2.1 million. They have staff costs of 1.5 million. So staff costs currently are double the receipts. So first thing, so far, operating cash flow outflow is 6.7 million, almost 6.8 million for the year to date. So roughly almost 10 million for the whole year. Cash on hand, no debt, that's good. Cash on hand, I've went straight past it. 1.59 million, so there is a chance they might have to answer question 8, or they do have to answer question 8 because they've only got 0.7 quarters left of funding. No, they're getting a R&D incentive refund. So typically section 1 is, does the company expect to have the current level of operating cash flows for the time being, and if not, why not? And they're just saying they're going to get an R&D incentive refund of 1.4 million. And the company continues to commercialize its SaaS business model in multiple markets with new customer sales and renewal of existing customers, providing ongoing cash flow. Sometimes I really like the replies to question 8 because it gives us a little bit more insight into the company. And sometimes the company will even mention we expect to be operating cash flow, free cash flow positive in the next quarter or a couple of quarters from now. Anyway, and another thing I'd just like to look at, there was a couple of nice little potential graphs here. No, here we go. Cumulative number of Painchek assessments. It is rising. Okay, now onto this particular chart. Painchek. Oh, so this is looking way more interesting. This reminds me of back in September 2023, share price just took off and then pulled all the way back. So it's taking off again. The one thing I'd like to see here is higher volume. That's the one thing missing, is the higher volume. That is telling me something is really driving interest in this company. Share price has increased, has probably doubled. Yeah, it says doubled since February or March. So charts doesn't look half bad, but I wouldn't be chasing this. Share price has really taken off, and the lack of volume is probably the slight concern for me. Thank you for that, Trader Hooper. 2 in a row. Ed Cavey, thanks for giving your take on 3DA and Miro, which is of more interest to me, and IPG was really interesting to hear. Would love to also hear your take on EVT, Event Hospitality Entertainment, if you have the time. Yes. Now, the reason this one entered my watch list is because of the chart. This is actually a really nice looking chart. Funny enough, after a long-term downtrend. In fact, it broke the downtrend back in November of last year, and it broke at about $11.50. And since then, the share price has almost gone up 50%, which is weird for this type of company. So 2.63 billion market cap, 2.22% dividend yield, P ratio of 307.4. So this is another case where I don't think the P ratio is relevant. There's probably a one-off somewhere. I'm not sure if I could describe this company as high quality. Definitely not. In fact, I can say I don't think I would ever describe this company as high quality. Just confirm that. Let's have a look at the long-term chart. Now, maybe between 2001 and 2015 looked pretty good. Share price in a beautiful uptrend, but really since the highs in 2016, share price has done really nothing. And the share price currently is moving back towards its all-time highs, which is at $17. And twice share price has got to $17 and has failed to get through. So the share price is moving to that level. So third time lucky, maybe, for Event or EVT. So this company owns, pretty sure they own cinemas. They own hotels or motels, something like that. And I'm pretty sure they own something in Thredbo. Definitely EVT, because there's EVT cinemas. What I'm just going to have a quick look is their financial history. Let's have a look, just at their overview. The company operates through entertainment, hotels and resorts, Thredbo, Alpine Resort, and property and other investment segments. Event cinemas, makes sense. Moonlight Cinemas, Greater Union and Birch, and Carroll and Coyle. Fun enough, I have heard of all those. And the operation of Signbuzz Rewards, a movie loyalty program, as well as State Theatre, 2,000 seats theatre located in Sydney. I did not know that. They also own Ridges. Do they own Ridges or just under the Ridges, QT, Atura, and Thredbo Alpine brand? Yeah. So I'm right. I knew this company owned cinemas and hotels. There you go. Okay, so market cap is $2 billion. They do have a little bit of debt. So $1.2 billion of debt. So enterprise value is $3.3 billion. Debt to equity is 1.3. So that's a little bit higher than what I would like to see. Return to equity, last 5 years is 3.6%. Return invested capital is actually negative, so not a good sign there. Nice gross margins, 76.6%, but operating margin 7.5%. So thin margins when it comes to operations. Net margins at 0.7%. Free cash flow margins 12.3%. That's a little bit better. And revenue growth non-existent over the last 5 and 10 years. 21.9% over the last 3 years. And earnings have been going backwards over the last 10 years as well. Dividend yield 2.3%, payout ratio 659.1%, which is an explanation, not an explanation, which just shows you that the company's P ratio 236.9, says it here, is probably because of a one-off in the most recent financial year. So if you have a look at revenue, yeah, there's a big drop in 2020, 2021. It's just gone back up to the levels it was before COVID-19. So no real big increase in revenue of this company over the last 10 years. So if you look at the period between 2015 and 17, revenue got to about 1.3 billion, and it's at 1.2 billion right now. We had that little down period during COVID-19. I like to have a look at operating margins. And yeah, operating margins going back to where it was 10 years ago. It could improve a little bit, I suppose. And the other thing I'm just going to have a look at is income. And oh yeah, income really low, 4.8 million in the last year, but it was 106.5 million in 2023, and it was routinely between about 110 and 130 million back between 2015 and 19. So that would be the aim I'm looking for, around about 100 and 130 million. And if you do that, if you just say this company should get their profit back up to 100, 130 million, that would mean the P ratio of this company is around 20. And that's not including the debt. So just based on valuation, yeah, I'm not sure why there's a lot of interest in this company right now. I do like this little thing in Fincher. They have the bulls and bears say. So the bulls are saying solid culture and management team with a track record of exploiting mature assets has the potential to lift the operating performance of its German and New Zealand cinema assets. The firm can make use of its healthy balance sheet to refresh its hotel and expand. Healthy balance sheet, they have a debt to equity of 1.3. I don't know about that. Anyway, chart looks really good. I did see the really good chart and was thinking to myself, oh, maybe I could trade this one. And then I decided not to, just because I didn't see any value. And I'm starting now to bring value to my potential trades. And I did read some research that even if you're comparing two companies' charts and they look pretty good, go for the one that is better value, because you're more likely, it makes sense, you're more likely to get a really good gain out of that one. Anyway, so that's my thoughts on EVT. For me, not a high quality company. Over the last 10 years, really hasn't gotten anywhere. And the chart is, or share price is getting back up to its all-time highs. But yeah, there is some reason the market is interested. I don't know why. Ryan Coral says, can you explain what is happening with Nexion, NNG? Thank you. I actually did answer this quite a while ago. I've done a couple of videos on Nexion, and then someone asked me what's happening with Nexion, because they've been in a trading hold for quite a while. And I think the initial reasons for the trading hold was an acquisition. And last time the company traded was April 2024. I thought it was a little bit longer than that. So yeah, I thought that's over a year ago. So any company can have 2 years of no trading, and then after 2 years, they get thrown out by the ASX. So this company has to do something within the next year, or otherwise the ASX will say, bye-bye. You'll notice a really big volume coming through just before they went into trading halt. So I'm sorry, shareholders of this company, because nothing worse, it has actually never happened to me. There would be nothing worse than owning a company for a year and you just can't trade it. You just can't get rid of it if you wanted to. Markup is $4 million. So let's go back to April 2024 to see and understand what happened then. April 2024. And I believe it was this trading halt, 23rd of April 2024, something to do with an acquisition, if I remember correctly. My memory could be playing tricks on me. Here we go. Yeah, so requested trading halt pending an announcement regarding a material acquisition. So what's happening? Yes, I have no idea, because I have not really followed this one at all. On occasion, I'll have a quick look, but they did release on the 30th of April continuation of voluntary suspension. So why? And non-binding LOI for the sale of Nexion data center. So let's have a look at why they're still in voluntary suspension. They should give a reason. Oh, okay. So this, okay. So actually, they do give a reason. The proposed transaction is significant and demanding. Well, it's taken a year so far. We continue to make good progress, and the directors are satisfied with achievements to date. So this might be the longest acquisition in history. That's why there's no trading with Nexion right now, because of this particular acquisition, which is demanding and material. This could be company changing, but we just don't know that just yet. So they're selling a data center. I have no idea they had data centers. So they own data centers. Yeah, there you go. 2.5 million. So that's what's happening with Nexion. Material acquisition. That's taken a long time. Long time. King Consumer says, wondering if you could take a look at Barton Gold if you get a chance. It's been a really positive run since a breakout in late March and just completed an institutional placement at a premium. So some people are very interested. Looking a bit stretched at the moment, but looking at the gold resource, they will have available as a potential to be one of the next mid-tier producers. Think Capricorn. Barton Gold. We'll first have a look at the chart. Why not? And oh, look at that chart. Look at that beautiful run up. So share price has, yeah, really nice. Share price going sideways, and then all of a sudden share price just going silly. Now there's one period or one little spike in volume, so you can't really see how volume has expanded since about March. So if we just zoom in, yeah, here we can see how volume has really expanded as the share price has taken off. So this is the sort of thing I do like. And we haven't really seen any pullback. So this is a case where you might wait for a pullback and the pullback never happens. There was a slight pullback back in April, and although that pullback would have been because of the tariffs, share price, went from 40 cents to 30 cents. And since then, we've had just very slight pullbacks. So there is a lot of interest in Barton Gold. Market cap is 158.72 million. I know nothing else about this company. Chart looks really good. But again, as all mining companies, the way gold goes or the commodity goes is the way the company is going to go. So if gold drops by half, Barton Gold share price is going to drop by more than half. But if gold keeps on going up, more than likely Barton Gold will keep on going up as well. So they've done that premium placement. Always like premium placements. And my biggest thing about this company would be how close are they to production? And where are they in the that mining cycle? What's it called again? I forget. So I'm just quickly going to go through this. Shares on issue, not a lot. Enterprise value is only 95, though this is late. This is old. We already know the share price has gone up since then. I like to have a look at the management. So Ken Williams, non-executive chair, former CFO of Normandy Mining, Newmont, Australia. Who's the big guys here? Principal geologist is Ian Garsed, 30 years in gold, IOCG discovery and resources definition, former MIM, Minotaur Exploration and South 32 senior geologist. So a lot of experience there. Oh, you mentioned Capricorn. They've mentioned Capricorn here as well. Why not? So there is probably some reason why they've mentioned Capricorn. So they're comparing themselves to Capricorn. I'd like to see a bit of a timeline, what their plans are moving forward. Here we go. So key targets. So accelerating stage 1 operations and large-scale stage 2 growth. Accelerating stage 1 operations, commercialization. Okay. Commissioning and production, Central Gawler Mine in calendar years. So I suppose we're about a year off from commissioning and production. Okay, so I might have a closer look at this one. I don't want to spend too much time having a look, but the chart looks good. And yeah, I just like this chart. Barton Gold, another potential gold opportunity on the ASX. Just James Dean says Infratil market cap is 10 billion New Zealand dollars. So again, that's like 5 cents Australian dollars. I kid. Oh, jeez. Net asset 16.1 billion. That's a huge discount. What am I missing? Asset valuation not legit in La La Land. I'm going to have to admit, I had no idea La La Land was a musical. Starting watching it, I got 1 minute into it and then turned it off and have no intention to watch it again. I don't like musicals. I just find it weird because in La La Land, they're in a freeway and they all start singing and getting on top of the cars. It's just, I just don't understand musicals. I just don't. I can go to I watched Phantom of the Opera and Les Mis at like a theater. When it's that I don't mind that, but a movie when they just start singing randomly, I just can't watch it. I'm sorry, I just can't watch it. Anyway, so I've never seen La La Land and I've no intention to see that movie. Anyway, Infratil, if you're right, and they have net assets of 16.1 billion and market cap is 10 billion, there is something skew there. This would be a massive buying opportunity, maybe. So let's have a look. What I'm going to do is just go to FinChat. And so the first thing is, if you're right, PB should be like 0.6, 0.7. And it says here it's 1.5. They have debt of, so market cap is 10.2 billion. They have debt of 6.76 billion. Next thing I'm going to look at is a financials balance sheet. So your net assets is equity. So equity, according to this, is, oh, this does it again. What I just realized, if you collect this reverse dates, it can change the way the dates. I like dates going from earliest to the left to latest on the right, and they've just changed it here, so I can change that. I just discovered that today. Anyway, so if we have a look at equity for Infratil, currently it's at 8.2 billion. And what did you say? The market cap is 10 billion, net assets 8.1 billion, 16.1 billion. Okay, I'm just going to have a quick look to see if FinChat is right. It could be wrong. So 4-year results, 28th of May, 244 pages long. Okay, so net assets is assets minus liabilities. You might mean when you say net assets, you could be disregarding the liabilities. And I would say any sort of infrastructure company would have a fair amount of debt, because I can't think of one infrastructure company that doesn't have a lot of debt. Transurban has a massive amount of debt. They're just debt vehicles. So what I'm going to do is just have a quick look at this company's balance sheet in there. If I can find it, it should be a little. It should be a little. What do you call it? Index. Not index. Here it is. It's not. No, I don't want a presentation. I want financial statements. So this company has data centers. They also have renewable infrastructure. They own a part of Wellington Airport. And what we're going to look now is at the, we're going to get rid of this. And what we're now having a look at is the balance sheet. So 2025, they have total assets of 17.2 billion. So what did you say? You said 16.1 billion. 17.2 billion of total assets, but they also have, they have about $9 billion of liabilities, including about $3 billion in interest loans and borrowings in non-current, and 105 million in, no, did I say non-current? Yeah, $105 million of loans in current and 3 billion in non-current. So that means they have, if you have a total assets, 17 billion. If you have a total liabilities, 9 billion, this company has 8.2 billion in total equity, which is net assets. Net assets, 8.2 billion. Now, in saying all that, so even though I got 8.2 billion net assets, market cap is 10 billion, net assets 8.2 billion, I'm thinking of some of the other infrastructure plays, like Transurban has PB ratio, I'm pretty sure like 3. NextDC has a PB ratio above 2, if I remember correctly. I could be completely wrong. I'm just going to have a quick look. Now, these are not completely the same companies because they're slightly different, but these are just the two infrastructure companies I can think of right off the top of my head. And yeah, so PB ratio for Transurban says 4.3. I think that's a little bit high. And NextDC has a PB ratio of 1.9. So that's a little bit lower than I thought it was. If I saw an infrastructure company, now the other thing I should actually say here is valuing infrastructure companies is really hard. It's a really, really hard thing to do. I read this many, many years ago because I just couldn't understand it when I was trying to value an infrastructure company. I found it so hard. And then I did a bit of research, and yes, it is hard. I'm trying to think if I had it bookmarked. How to value infrastructure companies. Here we go. Let's have a look at this EY. I have no idea what this one is. Discounted cash flow. I wouldn't use a discounted cash flow. Okay, what does this website says? Valuation process for infrastructure assets. The appeal of infrastructure investments lies in their stable and predictable cash flow streams, often coupled with inflation protection features. Investors typically utilize DCF techniques to estimate the value of these assets based on forecasted cash flows. Yeah, I wouldn't do that. However, the process of valuing infrastructure assets is far from straightforward. Determining cash flow forecasts is a complex endeavor that demands advanced modeling skills. Most infrastructure assets require intricate financial models for various purposes, including valuation. These models must integrate a multitude of factors such as operational, regulatory, financial, accounting, and tax considerations. It is not uncommon for these models to comprise dozens of spreadsheets containing thousands of unique formulas, all crafted by financial experts specializing in this area. So that does sound similar to what I read quite a few years ago, that, yeah, this area is really difficult to get true valuations of these sort of companies. So sometimes I just look at price to book, and I think that's even probably not the best thing to do. So it's really hard because I've heard so many people saying Transurban. We go back to Transurban, their P ratio is like 400. Yeah, 586.3. What? P ratio 586.3 is so expensive, but you can't do that for this company for some reason. Anyway, this is why I try to study it. And when I tried to study it or research it many, many years ago, I just became lost. So to my thinking, valuing infrastructure companies is just so hard. It's just so difficult. And it's a reason why sometimes I just stay out of this area. But anyway, to me, it does look possibly cheap, but it looks like the net assets, the way I calculate it, is about 8 billion, not 16.1 billion. Okay, Scott says, EBO, major shareholder unwinding their position. It always puts me on C. EBO, who's unwinding? Who is doing it? Let's have a look at change in letter from Cybers. Is this Cybers Holdings who is unwinding? They've also sent a letter. Please see attached letter from Cybers received by EBOS. Oh, there we go. So Cybos says, we don't like you anymore. We're going to get rid of our shares. We're informing you that Cybos has entered into a block trade agreement with financial institution to underwrite the sale of approximately 27 million ordinary shares, 13.2% of the issued capital in the company. Following the sale, Cybos will have 4.9%, so they're still going to have a few shares. They have not sold any since 2020. They remain supportive of the company. They're reducing its ownership to support diversification of assets and redeployment of capital to other growth opportunities. Okay. So I suppose they're allowed to do that. And I guess probably why there was a massive spike in volume. No, there wasn't. It says there's no volume spike there, which is interesting. So I'm going to go to the chart of EBOS. Yeah, there was no spike in volume. So a lot of times when there's this sort of trade, you'll see some big spike in volume, but there's not. Share price did go down 4.47% on that day. EBOS share price is going sideways over the last, 2 years. It's been going sideways for 2 years. Nice consolidation period for EBOS. I'm not taking much away from that. You could even say, if they are unwinding this position, their position, they could actually increase the liquidity. There you go. Ben Hutchison's talking about EROAD has gone berserk. It has gone berserk. 87 cents to $1.37. And they did release their results. I thought it was okay, or pretty good at the very least. And the share price just keeps on increasing. I was actually thinking of buying some shares on that day, which would have been the 26th. The low was 87 cents. That's not exactly true. It was like 4 shares traded, but I could have bought some at 90 cents or 94 cents, I think it was. And then massive amount of shares traded on the 28th. Look at that, 22.3 million. Before that, you can just see a massive increase in volume. very little trading, and then all of a sudden, massive increase in volume. Now, the volume is going down, and this does make me a little bit wary that once we see volume dry up, more than likely will, you're going to see a pullback in the share price. So this is one I am not chasing. I did talk about EROAD the other day, but if you just have a look at the chart for EROAD, yeah, just gone bonkers, and the share price is at the previous high as well. Share price is at the previous high, but the massive spike in volume. Not sure what caused that. If we go back to the announcements, ceasing to be substantial holder, change in substantial holding. Let's see if someone has increased a stake by a large amount. Elliston Capital went from 9.4 million to 11.5 million, so it's only 2 million. And what was the other one? There was a ceasing to be substantial holder. So someone has decided to sell out. Maybe not completely set out, but Brilliant, part of the Volaris group. Oh, they've completely sold out. For last disclosure, 21.2 million shares, and they went to zero. They sold, on the 28th of May, Brilliant sold 21 million shares on market. So they sold all their shares on market. Congratulations. That was pretty good. Well, the share price has gone up high since then. So that's why there was a massive spike in volume. Someone just decided to sell on market. I'm surprised there was enough buying to cover their selling. So it looks like they've got it now. But anyway, if you go back to the chart, share price has just gone bonkers, berserk, as Ben says. I don't chase these sort of scenarios because share price could pull back a significant amount. I'm looking for the more calm breakouts, not this wild berserk breakout. Is there takeover rumors stoking the price? I haven't heard any rumors, but doesn't mean there's no rumors out there. There could be a lot of rumors, but I don't pay attention to rumors. Killer Name says, Taco baby. I saw this and went, what? What does taco mean? And then I just found out what taco means last night. Trump always concedes. No, Trump. Oh, I forget it now. It does a meme, and he also mentioned taco, or someone mentioned taco to him in one of his meetings or something. Trump always caves in, or something like that. Trump always chickens out. Trump always chickens out, or something like that. Anyway, yeah, Trump always chickens out. So it's all over the news now. So when I saw this, I had what taco? What does this mean? Taco baby. Trump always chickens out. So actually, it's in relation to the market. So when he sees the market dropping, he just changes his opinion. So this was true his last presidency run. He always was paying close attention to the market. So for us, it's not a bad thing. It's not a bad thing at all. Anyway, Brandon Walker says, hi, that EOS and Dateline stock you spoke about has been trading strongly. So I was going to include Electro Optics as the chart of the day yesterday. So here, Electro Optics is the chart of the day. Why not have a chart of the day in this video? So why is Electro Optics the chart of the day? Because look at this chart. Nice little breakout. They did release something like a contract win. Now, I don't usually get excited about contract wins. Now, I am a shareholder of Electro Optics. I've held shares in this company for probably over 10 years now. And I did take profits when the share price got to $10. I have to say that when the share price got to $10, I took profits, but I did not completely sell out because I wasn't confident the share price would pull back. But I'm still a shareholder, still have those shares. And yes, new Slinger counter drone order for 53 million Australian dollars. They also had a CEO AGM. I did not remember that, did not know that because it was not marked price sensitive. So there mustn't have been any new news at their AGM. Now, one of the reasons why I'm not a biggest fan of these contract wins is because Electro Optics, they're highly intensive, capital intensive. So even though they might get a big win like this, they do have to spend a lot of money to satisfy the order. But the market likes it. Share price has gone high on that day, and we've seen continued high volume since then. So this is nice. I like this volume. I like how the share price is I've gone back to at least about a 6 month, no, even more than a 6 month high. So it's on about almost a 9 month high for Electro Optics on the weekly chart. Even the weekly chart, getting above $2 is a significant level for this company. Getting above $2 is sort of a really good level. And look at that volume the last 2 weeks, really good volume. That's healthy volume. So stock of the day, no, chart of the day is Electro Optics. Looking pretty nice. Ben Hutchinson says, Clever Culture Systems, CC5 had its largest volume of 2025 today. I've topped up my holding twice this week and noticed someone much bigger than me is buying large chunks, although a lot was around open today, which isn't supposed behavior of professionals fund managers. Clever Culture Systems used to be called LBT. I have pretty good stories about this one. I was also a longer shareholder of this one. And then this is sort of like same as Electro Optics. I sold out near the high for this one. So whenever you have really good success stories, just make sure you keep on telling it. So LBT got FDA approval in 2016. Share price went from like 10 cents to $1. And I did not sell everything at $1, but I got completely out at $1. I sold everything on the way up. And then I sold my last shares in the LBT at the high, which was around $1. And then the share price pulled back because you get FDA approval doesn't really mean anything sometimes. Sometimes it does, but sometimes it doesn't. But anyway, it does look like Clever Culture Systems is moving in the right direction. They're starting to sell that equipment, which is the APAS, something like that. See if I can, APAS Culture. Anyway, so the last, the pennies for C, this one did pop up on my radar. And this company is starting to pop up more and more on my radar. Because the company is or was operating cash flow positive in this quarter. So 2.1 million in receipts and operating cash flow positive by 1.1 million. Now, even though they do mention here they are operating cash flow positive for the year to date, that does include almost 2 million in government grants and tax incentives. So I always like to exclude that, which means they're not quite operating cash flow positive for the year to date. But a nice quarter for the company. And they're starting to sell more and more of these APAS, and they're selling it to bigger clients as well. APAS independence, that's what it is. In fact, they just mentioned here, sales momentum for APAS independence in the pharmaceutical manufacturing sector continues to build. Bristol Myers, that's right, Bristol Myers, which is a pretty big company. Markup is 50 billion. Bristol Myers, markup is 50 billion. BMY, 98 billion. I was well off. I was going to say 100 billion, but 100 billion seems a little bit too stretched for Bristol Myers. So they're starting to sell some of the equipment to some of the big companies, the big boys, the big players, big girls, whatever. Anyway, so I do like this company, but I can't remember the chart. So let's have a look at the chart for Clever Culture Systems. And share price up 19% on Friday. Share price still going sideways. I think it just wants to break out. It's on the cusp. I'm going to say it's on the cusp of breaking out, Clever Culture Systems. So keep this on my watch list. Definitely. I think this one could really take off, particularly if they gain or continue their momentum in this area. And you also said, you probably know more about that. There's no any substantial holder changes or anything like that over the last month. But if you follow it, you know what's happening. Rick Thelian says, ChatGPT, the Lorry Corporation stock price is down today due to a downgrade from Morgan's, a broker, and a focus on the company's recent performance, particularly lower jackpot activity. The broker reduced its rating to a hold with a lower price, citing these factors. Additionally, the company's revenue decreased the first half of the year, partly due to lower jackpot outcomes. So you just asked ChatGPT why stock price is down, I'm assuming. So let's have a look at, I actually did notice this, by the way. Yeah, I noticed it was down 5%. So I go through all my watch lists starting on Friday night. And in fact, the watch list that this company is in is one of the first watch lists I look at. And the first thing I noticed when I looked at this company was the share price was down a fair bit. There it is. Yeah, there it is. You can actually, it's quite noticeable, and you can see really big volume coming through. So everything that ChatGPT just said right there sounds fine. In fact, I'm going to ask ChatGPT the exact same question. Why is Lottery, what's it called? Lottery Corp down 5% on May 30, 2025. Let's see what it says. It might give us exactly the same answer. Broker downgrade, financial performance, and market reaction. Yeah, I'd say it's this down. Oh, this one says Macquarie Group. You said Morgans. This one said Morgans, and now we've got Macquarie Group. Downgraded TLC's rating to neutral and reduces price target to 535. Maybe there's a few downgrades. There you go. Financial performance. Well, that's old. That's old news. So it's mainly, I'd say it's 99% because of the downgrade. By the way, is this a high quality company? I'm not sure. Maybe. This was spun out. This was spun out of Tabcorp, wasn't it? So yeah, I'm neutral. I'll say I'm neutral on Lottery Corporation. Simon PT says massive selling from insiders in Chemist Warehouse. What's going on? So let's have a look at Sigma. Let's have a look. Appendix 3Y, change of director's interest notice. What's going on? How much had they sold out? Is this a reason to be concerned? Danielle D. Pila disposed of a lot of shares. Ooh, gee, it's continually selling of shares. 29 million shares over 4 days between about $3.15 and $3.20. Still owns 31 million shares, looks like. So selling about half of her shares and getting $60 million. There's maybe no reason. Yeah, no reason. Why Daniel? Why did Daniel? I'm going to see if ChatGPT can give us some information on this. Why did sell shares in Sigma? Let's have a look. See what it does. See if it gives us any insight. Okay. There you go. It says nothing's happened. So you can just see here that ChatGPT is not perfect. And sometimes you just go say she sold 29 million shares during the week. Search better. Sometimes I get upset with ChatGPT and I'm pretty harsh to it. Search better. He could probably reply to me, write better. There we go. There we go. So you do have to sometimes manipulate and just say, do better. So yeah, so while the specific reasons for the share sale have not been publicly disclosed, it's common for executives to liquidate portions of their holdings for reasons such as portfolio diversification, liquidity needs, or personal financial planning. Notably, other insiders, including Damon Grace, have also sold substantial blocks of shares in recent months. Okay, so that could be a concern because if we continue to see the directors sell out, that would be possibly a negative sign for this reverse merger, I suppose you can call it. How has the market reacted? Not much. So I suppose that must have been, that's a lot of shares. Market hasn't really reacted to this. Share price keeps going up. Edwin Fernando says, do you think Nufarm is a takeover target now? Yes, absolutely. I actually think with the share price just being pounded down, share price just keeps on dropping. I do think it's a massive volume. I do think there is ripe for a bounce, but I thought that was true at the start of the week. Bounce has not happened just yet. So I did buy some shares. No, I bought some shares and then I bought some more because I do think it's ripe for a bounce. And I'm waiting, and I'm not hoping. I think there's a chance the share price could bounce to say $3 or so. But with the share price where it is, with the decrease in the markup, the valuation of this company, I do think this is now prime for a takeover. Let's see. Let's keep on our ChatGPT. Do you think Nufarm is prime for a takeover with share price dropping significantly? Share price dropping significantly. Let's see if it could just give me a good answer with that. It is searching for the web. Yes, Nufarm appears to be potential takeover. Get it? Given recent developments. Okay, so it's given us some links here from the Australian Coda Imogen. According to this, major shareholders, including Alan Gray, L1 Capital, and Tanara Capital, are urging the board to explore a full sale of the company rather than seeking additional external funding for the Seed Technologies division. These investors argued the market has lost faith in Nufarm's current strategy and that a sale could unlock greater value. There you go. Several factors could complicate a takeover: debt levels, yep, good market conditions, and board resistance. Okay, so there you go. But I do think it's a potential takeover target. That'd be good. Maybe at a 50% premium. That'd be nice. But anyway, that trade is not going for me. I just expected to bounce. It's really oversold, but a company can be oversold or overbought for an extended period of time. Okay. Happynow says, I love the timing and heading of the video. I was going to ask if you can look at MTM chart. I bought in April at 21 cents and watched it go up and up on a story stock and bailed out at 37 cents. Did I do something very stupid? Kneppy, Happynow, the noob. No, you did not do anything stupid. MTM. So I bought at 21, sold at 37. Share price is now 37. Bailed today at 37. That makes a little bit more sense. Did you do? Well, we don't know. The chart looks okay. Okay. One thing I don't like is I'd like to see a little bit higher volume coming through this little upswing period. Don't know anything about this company. So obviously they're in critical minerals. We do know there's a little bit of hype in this space right now. And sometimes that positive sentiment can shift negative fairly quickly. We saw that with data centers. Went from positive to negative fairly quickly. And I think the market is overreacting on the negative side now with data centers. And we saw that with NVIDIA, how they're just expanding, and there's nothing changed when it comes to data centers. It's still really positive sector. So anyway, so sentiment in this could change like that. And this is still a story stock. And I would tell you that going from 21 cents to 37 cents, taking profits, its share price could go higher from here. There's no reason to say you've done something stupid. I have no reason to say you've done something stupid at all. So yeah, that's all I can say. Ahmed says, Telix, accumulating phase, you think? Some might say it's a distribution phase. Let's have a look at the chart. I think this could go either way. I think the uptrend has come to an end. And now because the uptrend has come to an end, it's just wait and see what happens next. So if it's an accumulating phase, then next we're going to see the share price go up. It could be a distribution phase, and then the share price could go down. Or it just could be a nice consolidation period where the share price goes sideways for 6 months, 1 year, 2 years, 5 years, and just wait and see what happens. So a lot of times when you see share price go up like this, a really nice increase in share price from $8 up to $28, $30, you just need a bit of time to breathe. Now, if you go back to this period here, so if you go from, say, June to September of 2024, there was a 3-month period where the share price really did nothing. But this has been a little bit longer, January through to May, a little bit longer. But anyway, so you could be right. And Barton Cadon skids Dateline about to go to the moon next week with some good announcements over the next month. Is that a condition? With some good announcements over the next month, it will go to the moon next week. I would say Dateline has gone to the moon already. it's just gone bananas. Yeah, that's gone to the moon. That's an exponential rise in share price. Whenever I see an exponential rise in the share price, I do know there is day traders in it. I would say a lot of day traders are in this one. 10 cents is a natural resistance level, and we need to see the share price pull back significantly because this is unsustainable. Now, we could see another leg up, but whenever you see this sort of rise and rapid rise in share price, eventually you're going to see a lot of selling coming in. And I think I can't remember a single time when we haven't seen selling coming in. Now, we saw a little bit of selling coming in May for a 4-day period. We saw a bit of selling coming in 21st of May, but we haven't seen any really big selling coming in. Now, maybe everything's aligned perfectly for this company, and this is the start of a massive run on the share price. But even then, you're always going to see pullbacks. Let's go to Northern Star. So Northern Star had one of the best runs ever. Share price 2010, 2012. I'm trying to remember when the share price was really, really low and the share price took off. So here we go. Share price took off. It was 2010. It was. Share price on that day rose 29%. Went sideways for a while. This is what I like to see when the share price breaks out and the share price goes sideways and then we start to see it go up. I like that sort of movement. But even then, you can see long periods the share price did nothing. And even in that period where the share price did nothing, we always saw the share price pull back by a fair bit. So in March 2011, share price of Northern Star pulled back by 35 to 40% in a fairly short period of time. There was another big pullback here. But even with these pullbacks, share price was still in a really good uptrend. This is not a good example because we do not see the share price of Northern Star just go exponentially up. What's a good one? I used this one earlier. Clever, whatever it's called. Clever Culture Systems. So if we go back to 2016, share price just went exponential. It's probably not a good example either because this went exponential over a 2 or 3 day period. Massive volume coming in. Share price went from just below or just above 10 cents to a high of $1. You don't see it here. There must have done something to the shares because I'm certain the share price went to $1. But that was over a very short period of time. What's happening with Dateline is over a little bit. I'm trying to remember of a really good example when the share price went up a lot and then pulled back. What's a really good example? Maybe Spartan. Spartan Resources. No, not Spartan. Anyway, it wasn't Spartan. Oh, I've got a good one. Maybe this is a good one. This is a good one. What's it called? I'm forgetting the name of it now. Forgetting the name of it. It's a gold company. It was back in 2020, it was really hyped up like nothing else. Chalice Mining. That's it. Chalice Mining. So this one, I want to see if this one has something what I'm looking for. No, it doesn't really. Or maybe. This could be a nice little example. Share price just took off significantly in April 2020. Share price went from 17 cents up to $1.30. And then even then, you can see a long period where the share price just went sideways. So this is a sustainable uptrend. You need a period where the share price goes sideways. And then we saw the share price move into an uptrend. I'm trying to find a situation where the share price just went bananas and then pulled back significantly. There's a lot of examples out there, but I just can't think of one right now. Of course I can't. Oh, they always happen. But when you want to bring up an example, it just doesn't happen. Oh, wait there. Did I? No, I got rid of that watch list. I had a watch list. Yeah, I got rid of it. It's not a breakout. Anyway, that's all I have for, by the way, the whole point of me going through that is with Dateline, if you go back to the Dateline chart, if you go back to their chart right now, this can't be sustainable. It's just impossible for this to be sustainable, for the share price just to keep going up. It's a 10-bagger over a 1 month period. It's a 10-bagger over 1 month period, and it's just not sustainable. So whenever I see the share price, be exponential, rise exponentially like this, you're almost always going to see a significant pullback in the share price. Anyway, so I'm not sure. It's already gone to the moon. That's what I'm going to say. It's already gone to the moon. Maybe next stop is Mars, or maybe the next stop is Alpha Centauri. There you go. That's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.